Good morning and welcome to this webinar here today. We are speaking with the CEO of EQ Resources, Mr. Kevin McNeil, who's going to walk us through the ASX announcement this week, and we'll have time for some questions at the end. I'm going to hand it over to Kevin. Over to you, Kevin.
Peter, if you see a new face on your screen there, this is Andrew Mooney, and Andrew is our new CFO, which was much needed for EQ Resources for long-suffering shareholders. I'm sure they can commiserate with us, but Andrew was really a welcome addition to the team. He's been up to the mine sites now, and it's great. So Andrew, maybe would you mind just to start us off, just give us a little brief explanation about yourself?
Sure. Thanks for the introduction, Kevin. And nice to meet all of our shareholders. I'm sure we'll meet in due course in person. But no, great to be part of the company. Join Kevin and the board on the journey for EQ Resources, which is an exciting journey. My background: I'm a 25-year finance veteran, and have been working in mining for the past 16 years. So very familiar with mining operations, and wouldn't want to work in another industry. I think it's a fabulous industry. So looking forward to adding value to EQ Resources and build its presence in the market, and ultimately drive returns for all of our shareholders and stakeholders.
I'll just jump in here before Kevin gets going, Andrew. It's a great background you've had in mining, and you are Queensland based. What attracted you to EQ Resources, and what are your early impressions?
It's what attracted me to EQ Resources was the trajectory and ambition that the company has to expand its tungsten position globally, with the majority of tungsten production out of China. And the geopolitical environment that we're experiencing at the moment, the demand for Western sources of tungsten is certainly skyrocketing, and that was certainly a key reason that prompted me to move from my previous commodity, which was in the coal business, to a critical mineral of tungsten. And obviously, I was also very impressed by Kevin and the board. I think they're very ambitious in where they want to take this company, and it's a ride I want to be part of.
Yep. Thank you. So that's the response we were looking for. Thanks, Andrew. All right, Kevin, over to you. Let's get into it and listen to the update and what you've got to say, especially concerning the announcement this week, which was quite a milestone.
Yeah, Pete, would you mind flipping a couple of slides there? There you go. Disclaimer. Yeah, Pete, we're incredibly excited by this new acquisition. We've been talking about vertically integrating EQR to increase the value of our products that we produce from the mine, and also to secure price. As you know, tungsten has been notorious for going up and down depending on what the Chinese mood is at the time, right? So we feel that it's if we, by vertically integrating, we protect the company as well as we add value to our products at the end of the day. So, not only have we acquired like this asset, but we've acquired an excellent technical team like George Chen in the market, Martin, Tony, Sean. All these guys are really big additions to help EQ grow into the future and value add on to our products, right? So, it's been, for us to go out and build this facility from scratch, we would be 3 to 5 years. We wouldn't have the expertise that the TMG is bringing to the table, and also the cost of reproducing this facility would be well over the acquisition price that currently exists. So I guess what I'm saying is that I think between EQR and TMG, it's certainly a great mix, right? It truly is a 1 + 1 = 5 acquisition. Yeah, good. Do you want to go to the next slide? And with the TMG, when we looked at the opportunity, Pete, and the strategic rationale of why EQR gets into it. So one thing that we bring to the table, right? There's incredibly tight supply of raw materials into the to be able to produce the ferrochrome. So for the guys, that was the main stumbling block, is to get access to this kind of material and the funding required and the offtake available. And between ourselves on the product side, especially out of carbine with some wolframite, out of Spain with a high quality scheelite with the right value, and then Cronimet coming in with the scrap end of the business as well. What we've seen is that with this combination, that TMG has always been a good project, but it just needed that raw material support, right? And constant supply. It makes money. We know that. They've proven the smelter works. They just didn't have that raw material supply, right? So that really was number one. And vertically integrating, like I had said, downstream to it's always been our ambition. We've said it in almost every presentation. So we've done that now with this acquisition, and also with the Elmet providing a tripartite agreement downstream, which we'll talk about a little bit later. Andrew, you want to pitch in?
I think you've hit the key points there, Kevin. I think certainly there's opportunities here for significant margin, and the ability for us to provide raw materials into the plant is very important for this project. What I would say is to EQR shareholders, this is a strategic acquisition that not only increases our footprint to another destination. Now we'll be operating on 3 continents, but there's also a diversification of product. So currently we're producing tungsten concentrate from our 2 operations, and now we'll be producing ferrotungsten. And that just opens up a new market of customers for us as well, from which to expand our business. So I think it's a very positive acquisition. Obviously, it's subject to due diligence work that we're about to commence, but certainly a positive transaction.
Yeah, I think, Pete, just it adds that 20% margin onto the product, right? So whether it comes from carbine or comes through the refinery for the company EQ in its entirety, we can value add the portion of concentrate that goes to this stream. We can value add about 20% onto it.
And Kevin, as you said, to build a facility like that from scratch, acquiring the land, the permitting, the government approvals would have been a long and expensive process. And with consistency of supply of raw materials, you can then guarantee, contracts and offtakes to perhaps an even broader market.
And honestly, since we've announced this deal, we've been inundated from downstream players wondering when the first production is coming off, how do they get involved, so we see this as some of these downstream players providing the working capital required for this business from us. So that'll be a strategic part of the business that we'll leverage off of that supply. So you got to remember, in the end of 2026 to early 2027, U.S. Department of Defense is stopping Chinese supply of tungsten. So everybody is out there scrambling right now for securing supply of tungsten.
Okay, so a good position to be in. And as you said, Andrew, expanding to another continent and really embedding the company in that global supply chain, which is so critical.
That's right.
Yeah. Pete, I think you can flick up the next slide there. We just wanted to put this into people just playing with tungsten. A lot of our long-term shareholders, they kind of understand the business. But from our raw concentrate, 85% generally would end up, of all the concentrate in the world produced, 85% will end up into APT. And then 15% will go into ferrotungsten. But this operation will be the largest operation outside of China for ferrotungsten. And the Japanese in particular have been very aggressive since this announcement in looking at supply, securing supply, because they want a long-term supply, and they see EQR as that player to be able to provide the concentrate to a smelter like this and to give long-term supply for ferrotungsten, which has been in great demand in the Western countries outside of China currently. So, but interestingly as well, Pete, I was at the ITIA conference, the tungsten conference, when I was over in Spain at the operation. We attended the tungsten conference there, and very interesting. China is aggressively buying in tungsten currently from external sources around the globe, right? So that was a little bit of a shocker in the industry as well. So that was and also lots of interest from downstream players wanting to support projects, right, to guarantee their Western supply. That was the other big takeaway, I guess, from EQR or that conference. And then at the ITIA is just the critical metals and the support for critical metal projects, both from grant and from government-backed loans, that type of thing. Is just we met with most of the European governments when we were over there between roundtables or at ITI or at the IMAR conference. So it was very busy, very busy. Yeah. So you can kind of see on the map on the right-hand side, just the in Europe, in the big German steel mills in particular, a lot of the steel mills, that's where ferrotungsten ends up into the hardening of, bulldozer blades, grader blades, drill bits, all this stuff, right, goes into ferrotungsten. So it's quite interesting for sure. So that's really one of our main targets, is into Europe and the US.
And Kevin, just on the conference, you would have had many conversations. What was the flavour of that? Was it a bit of awareness that there's a tightening in supply? There's excitement about the industry. Did you get a feeling from other participants that they really had to get their skates on?
Yeah, I'm a newbie to it, but the guys certainly told me that it is a seller's market currently. There's no question, right? All the major houses we had meetings with, and yeah, very, very interesting. And the tightening of supply, we could probably sell 3 times as much tungsten currently as we have available.
Okay.
Very interesting. I think next slide, yeah. Yeah, so ferrotungsten, right? It's just as you see, it's in the tools, it's in the different hardening steels, specialty alloys, right? There's a whole bunch of test fusion technologies that are going on now, and these specialty alloys, right, that are soaking up some tungsten supply, as well as defense is a big growth industry coming out of the conference. The defense was up 10% or heading to 10% of the global tungsten supply, up from 5, right? So it's increased quite a bit. So yeah, it's a different market, and what it does from a strategic rationale, like where we would put this tungsten normally into the APT market, which drives the price of most things. So if we take 30-40% of our tungsten into ferrotungsten now, that puts more pressure on the APT price, and the supply demand characteristics kick in, right? So the price goes up, so we get more for our downstream products, right? So that's that also helps to diversify our product line. I think the next slide, Pete. Yeah, Andrew, you want to take this slide on the right?
Yeah, well, we touched on it before. There's certainly a margin uplift here, and in the graphic at the bottom, over the last 18 months, 2 years, there's been a decoupling of the pricing of APT to the ferrotungsten market as well. We've marked there it's 18.7% uplift over that time. So there's certainly value to be realized by EQ Resources from this transaction that we wouldn't otherwise have achieved if we stuck to the traditional business that we have. So acquiring this facility and taking raw materials from the operations that we currently have, with the operational expenses within the facility at these current prices, we believe there's a margin to be made of approximately 20%. So for all shareholders, that should be encouraging. Obviously, all the work that we still need to do is subject to due diligence, but on the face of it, that's certainly a positive for the business.
Yeah. And on the left-hand side, this is sort of a different view of my favorite chart from the European Union, showing the most economically important element is tungsten. And again, these are all the reasons that we've talked about. I don't think I have to reiterate that, but again, it's still there, and everybody is very concerned, governments included. This is a mainstay of industry, from cutting tools to you name it, all the products that you see. You can't do without tungsten, and it can't be replaced because of its high melting point. But yeah, so again, just the dynamics in the industry from the governments has been stronger than I've ever seen. The commitments on breaking this stranglehold of critical metals from China and Russia, having Western supply, the support is definitely there.
Kevin, that is an extraordinary graph on the left. There's some high-profile critical minerals names in there, and the rare earths for the magnets and turbines, and electronics, and tungsten being on top of that. It doesn't seem to be translated yet into the market awareness. So that's quite a surprising and very interesting chart.
Yeah, no, it is. It will come. It will come. Yeah. Stand by.
Okay.
Yeah. Yeah, so I guess I just wanted to just talk a little bit more about Elmet. Elmet make all kinds of specialty metals that go into windmills, goes into all kinds of different products around the globe, and it's a great partnership that we see with Elmet. And it's a very interesting one where we supply the concentrate to the refinery at Masson. It's a tripartite agreement which gets converted, and then they can use the downstream product to make their product. So it's a tripartite agreement, but the refinery can't guarantee them that supply without the concentrate supply. So that was good, and then they've put some money back up into EQR, and we guarantee the offtake of that. So and besides, I haven't met the guys yet personally, but Oliver certainly been with them, and apparently great people to work with as well. Yeah, Andrew, anything you want to add on this slide?
No, I think we've covered it in previous commentary, and it's the details are available on our announcement on the ASX. But certainly the point there, strengthening US and Australian relations. I mean, particularly in the context of the US government's Reshore Act, that requires the importation of Western sources of tungsten from 2026 into the US. So I think that's part of what's driving this deal between Elmet and EQ Resources, and we expect that contracts like this will only increase into the future as we get closer to 2026.
Yeah, and there's also a big push on between Australia and Vietnam as well for economic cooperation, and this deal certainly falls into that again. So the Australians have given us a lot of support with our Vietnam activities. Yep. So, operational update. I guess I just came back from Spain, so I could just give you some fresh take on it. We're doing very well again there this month. We're having hope to get another record production month out of there, and record quarter definitely is coming out of Spain. We've made some more adjustments in the downstream flotation of the material to capture more of the ultra fines that they were losing, and certainly had some more good meetings with Tomra and looking at a third sorter over there to help increase the throughput into the plant. So that's exciting for the future. So yeah, we have lots of recovery programs still continuing, which has surprised me at where we at today at almost 65% and climbing. And some days we've hit 72 in the plant. So I think the board has given me some new targets. Instead of 65, now they're getting greedy and want to get up to 75, right? So we're going to try to push to see what we can do. There at Carbine, we're into heavy stripping and the top of the pit, getting out of the floor of the pit for the rainy season. Unfortunately, that's where the high grade is on the deeper areas. So we're up on the top, pushing back heavy, getting down onto our Alanth vein, and our Alanth system is the richest and biggest system that we have. So we have to push that back. So we did the first year trying to take as much as we could without stripping, and now we're into the stripping and pushing back. So Carbine will be down a bit this quarter for sure, and then but it will pick up dramatically coming into the future as we hit those high grade Alanth system. So yeah, we're looking forward to that. But yeah, we got some heavy work. Our new mining team is doing well and getting everybody on board with the 2 new Sandvik drill rigs, and yeah, pushing ahead. And maybe just you want to talk about the market outlook, Andrew?
Yeah, sure, Kevin. So, without a doubt, there is strong customer demand for EQR products. And, as Kevin mentioned earlier, the TMG deal here has generated significant interest for customer offtake around the world. So certainly the demand is there for the products. And I guess the onus is on the team to deliver the production to meet the market demand. I mean, we went through geopolitics before, so there's huge demand, and we're aware of that. In terms of funding, several opportunities for us to improve our balance sheet. We're still in very close negotiations with the Queensland Investment Corporation here in Queensland for our next stage expansion works at Mount Carbine, and various calls for offtake arrangements and prepayment arrangements from various customers should we choose to go down that path as well. So a positive outlook.
That's good. I guess just in summary, before we go to questions, this news has been picked up more so, I think, than most news that we've had. We've had a big response, and the share price went up and went down again. But anyway, we hope it goes back to where it should be. But this interest is there's a lot of people following EQ Resources in the market, certainly, Pete, and everybody's watching the developments as we vertically integrate and on the M&A trail. So,
all right, we will go to some questions now. We've had a few that have come through. And let's see, would the global market size accommodate a TMG increase ferrotungsten supply by, say, 50% if TMG were able to secure enough of the concentrate? I think that's sort of what you were saying.
Yeah, the demand for Western supply, Pete, is already, like I said, we just announced the deal last week, and we've been getting inundated with calls wondering when the supply would be coming available. And people are wanting to diversify, but they want to have a stable supply of ferrotungsten. So there'll be absolutely no problem supplying it into the Western steel mills in Japan and the US. People will eat it up, no question. So that's the target, and that's the issue. The poor guys that just never had the supply of concentrate to be able to really make that smelter run. But I can't say enough about George Chin. He's well known in the industry, one of the top metallurgists, pyrometallurgists in the industry for sure. So his technology and it certainly works. So we're really happy to partner with him and welcome him to the team for sure.
And I guess this next question is concerning long-term offtake agreements. Once you get that constant supply and production profile up and stabilized, there's opportunity for those sorts of agreements?
Andrew, you want to take that?
No, absolutely. So, I mean, we'll take them all on a case-by-case basis, subject to the production from the plant and from our operations, but certainly open to long-term offtake arrangements for sure.
On the TMG acquisition, Andrew, I know it's still moving into a preliminary agreement and be some due diligence to be looked at. What are you looking at in terms of the valuations, the multiples, and perhaps what other liabilities that the TMG business has?
No, absolutely. Very important question. And we announced in our announcement we've got an indicative valuation for the TMG group of $13.5 million. That's Australian dollars, which we've determined based on our expectations of estimated production and margin to be achieved from that plant. And as a result, the valuation does assume a very low EBITDA multiple. So we think it's a fair valuation at this point. But as I said earlier as well, there's a lot of work to be done in terms of financial due diligence, legal due diligence, understanding the balance sheet in detail, the commitments, the contingencies. So there is work there to be done by myself and the team. But where we sit here today, based on the margins that I explained before as well, it appears to be a fair valuation. So, yeah, still working.
And Andrew, what do you propose or estimate would be the timeline for completion of that work and coming to a final deal?
Well, we're in a no-compete clause until the 20th of December, which will be doing primarily the work of the due diligence. We expect path to completion to continue beyond that and complete the transaction in the first half of 2025.
All right, and Kevin, Wolfram Camp. Last time we spoke about this, Tony was very excited to get on site. He liked what he saw and couldn't wait to get into the ground there. Is there any other reports on Wolfram Camp?
I've been seeing some of the numbers coming through there from some of the work that the guys are doing, right? So I just have Tony to make sense out of them. But anyway, things are looking pretty good around there. I'm not sure what exactly they mean, but they've been doing a lot of soil sampling, a lot of sampling in the pits, trying to understand the geology around the old historic pits. And so we have a team on the ground that's working there around the clock. We just announced that we are going to test the waste dumps. We've taken the first samples. There's 4.5 million tons of waste dump there. We think we could throw a sorter in and possibly upgrade that material to get some revenue created there in the next couple of years. But we're going to start the procedure like we did at Carbine, exactly to get through that. So yeah, there's some interesting numbers. It's certainly going to be. I believe there will be a mine there at some point in time, but it's a 3-year development from here, like to get that into production.
Okay, and I think it's hard to determine what the global price of tungsten is going to be. Those market forces are on their own. You've discussed the supply-demand tension that we're seeing around the marketplace. Do you think there's a catalyst coming where we might get a structural change in pricing, or do you think it might be a more gradual move, just given the global economic situation?
I think, Pete, like the December 1st, the news that they had put out, I don't think since Trump got in and the Chinese announced that they're pulling back products and tungsten was their number one on their list, right? And I don't think the market's fully absorbed that with that meaning yet, right? So it wasn't like they're stopping stopping shipments completely, right? Because I think that would be almost an act of war, right? But I think like the squeeze is definitely on now, right? It's definitely on. So I think it's going to bode very well for the price of tungsten.
And as that awareness builds, EQ Resources then stands out as a tremendous way to access that, take a bet on that global price of tungsten. EQ Resources has a very strong retail shareholder base. Are you seeing any change in institutional interest or broker interest, that sort of thing that sometimes takes a little bit longer to develop?
Yeah, there's certain people in the UK now have we're starting to get a bit of a following in the UK currently, and there's a few institutions and some of the Australian institutions that are starting to wake up to tungsten a little bit more. So yeah, we are seeing that. Just one other comment, I guess, coming out of IMARC that I found fascinating was one of the big chip making companies, I won't give any names, but approached us, or the machines that make the chips, let's put it that way, that have tungsten components in it. And so they are chasing the supply chain back and trying to secure where their tungsten is coming from, which I thought was very fascinating. So again, this is all coming into that 26, 27 that people are trying to switch supply. And again, partnering with companies like Elmet and downstream partners that we have guaranteed supply chain of Western supply that is going to be very important, right? So I think you're going to see this decoupling of the tungsten price between China price and European Western price of tungsten.
And it's certainly something that we're seeing across some other critical minerals, so that, as you say, Western world can secure long-term supply and know where it's coming from, and know what their pricing outlook is going to be. We've come to the end of our questions there. I might just ask Andrew if you'd like to leave us with something, and Kevin, a final takeaway from you.
I'd just like to thank everyone for their time today and their interest in our business. It's, as I outlined at the beginning of the webinar, I'm excited to join, and I hope our shareholders are excited to be part of what looks like a very positive trajectory for the company. So thank you for your time today.
Yeah. Yeah, I'll just reiterate that too, Pete. Our shareholders are some of the best in the world. They help us do due diligence all the time and chase down leads. And I can't say enough about our shareholders. Are great. Some of them have been there a long time. They're almost family now, right? In fact, some of them stay at my house when they come to town. So it's
yeah. All right, be careful with putting that one out there, but it is it is wonderful. EQ Resources is operating in a great part of the world, as we've always said, sustainably, economically. The local workforce really appreciates what's been built there as well, and it's been a good update today, gentlemen. So thank you. Thank you for everybody who joined us today. If there are any email questions you'd like to send through, I'll make sure they get through to Kevin. Please send them to peter@nwrcommunications.com.au. And thank you, everybody, for attending this webinar today.
Thank you,
guys.